All right, you guys, welcome. Doug McKay, antiwallstreetguy.com. On the last day of September 2011, we have the overall trend for the second week in a row as down, meaning short. This week is really not that much different than where we closed last week, other than we're testing this bottom here again. This bottom basically, not intraday. Intraday would be around 11:01, but we're looking at around 11:21. We've hit it a couple times here, here, and then we're very close to what we finished near the lows, if not at the lows today at 11:31. We still think that this is going to be, or is a fourth wave, sideways wave with a fifth wave down. Ideally, as we mentioned on the blog, on a still chart this week, we'd like to see 1050, have this take us down to 1050 on the fifth wave, and then maybe a year-end rally. Obviously, we're going to trade what we see. If we were to break out here above 1200 out of this channel to the upside, which could happen, we would exit the short positions and get long, entirely long. As it stands right now, we are more short than long because the overall trend is down. But because we're in this channel, we're not playing at 100% short or all short. We have selective long positions. Those long positions consist of utilities, XLU. This would be resistance here. We still are above the 50-day moving average and above decent support. If this was to close, let's say below this candle, we would probably exit, if not all, most of our remaining position in the XLU. But this chart has actually held up very well, as it looks like to be an inverted head and shoulders pattern. So we don't have a stop, a hard stop on this at this time. We did, as we mentioned on the blog last night, Thursday, is we sold 50% with a hard stop of our remaining long position of the Qs. We got below the 50-day moving average yesterday and a little bit on Wednesday. We put a hard stop in last night at 53. That was filled today. We closed below that at 52.49 on an increase in volume. We'll see if we get a little bit of a bounce in this next week. Whatever we have left, if it goes lower, we're going to cut it loose. Where we're really watching this area in here, that low was 52.75. We got below that today. And then short term, we were looking for this low to hold, which it didn't today. That's why we put our stop in at 53. As it stands right now, we're more short than long. So other than those managed clients that came to me with existing core positions that they want to keep, we were profitable today with the Dow being down 241. Not in a big way, but nevertheless we were in the green. Let's take a look at Goldman Sachs. We did have a position in some of the selected managed accounts in Goldman Sachs. We bought Goldman at 96.17. I put a hard stop in last night on all of it, just above entry at 96.87. Today we opened at 98.28, good open, but obviously we closed much lower, down 5.33% today. So we did exit just above our entry at 96.87 on a hard stop today. As far as J&J, this position was one of 3 Dow components today for the majority of the day. That was actually in the black, but it did finish down as the market continued to sell off. We do not have a hard stop or any type of mental stop at this time, but we will keep an eye on it. We'd obviously want to see it hold 61. I would probably sit up in my seat if in fact it broke 62. But I like it above 65, and I think it looks very good above 66. But again, if it breaks down, we'll let it go. This is one of our long positions. As far as gold goes, I really kind of want to stay away from it. Are we due for a bounce? Yes, but for me, you know, the 50-point days, the 100-point days in either direction, it's kind of hard to stomach that. I do think that 150 is decent support. I also believe that this low is not going to hold. That's not to say that we won't come up here and fill maybe a couple gaps and experience some short covering or some buying of the dips, or maybe a run up to the 50-day moving average around 170. But I don't see this holding. So that's that. I think GLD could go much lower, but we'll see. What about Apple? Very similar to Goldman Sachs, not all of our clients had Goldman, nor do all have or have had Apple. We bought this on a breakout. When we got to 420, everybody said it was going to 550. Sometimes that's when you have to, again, look to get out. Very similar to oil. When it was at 145, everybody said it was going to 200, and 145 was it. But we'll see. A chart is a chart is a chart. As we mentioned yesterday on the still chart, even though it held the 30 and the 50-day and the trend line, in some cases, depending on how much everybody had, we sold all of Apple. In other cases, if they had a bigger position, we kept half. So I would want to see it basically hold the lows that it put in today. Otherwise, I think 360, 350 is in the cards for Apple. I think it's potentially shortable under 400, although I don't want to short it because it's very much like gold. It could go anywhere. But I do not want to give back a big percentage here. So we're keeping an eye on Apple to hold this 381, 380 area. And that's pretty much it, you guys. The overall trend, the way we have it for the second week in a row on the S&P, the Dow, the Nas, and the Russell is down. The most highly probable pattern here continues to be a fourth wave with a fifth wave down. Obviously, we would change our thinking if we got above 1,200 on a close. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. We'll see you next week. Thanks.